from the management.
Net interest, income margin because of the reduction in the interest on deposits. This is the credit non-interest income details, and these are all the other expenditure details. And if you come to operating profit, as we have indicated to you, the overall for the total interest income stood at 5,029, showing and giving an opportunity to increase the operating profit at 999.49. This is the net profit position vis-a-vis last September as well as the sequential position to June 2015. Cost and yield ratios, cost of deposits has come down very well to 7.30% by September 15 compared to September 14 and compared to June 15 as well. This is one of the very important factors which has given us opportunity to increase our profit. Cost of funds stood at 6.50%. Yield on advances has stood at 11.36%. Yield on investment with profit, yield on funds which are indicated here. Net interest margin has improved to 2.76% as indicated earlier. Business per employee stood at 16.41%, more or less. It is flat compared to June 2015, a marginal improvement compared to September 2014. Business per branch stood at 152.73. Book value per share has increased to 457.45. Cost to income ratio stood at 45.09%. Return on equity, return on assets, which I have already indicated in the key financial indicators. And this is the position with respect to total interest on advances related to the half year. Then this is non-interest income related to half year. This is the total expenditure related to half year, which is the summary of Q1 and Q2, operating profit, net profit, cost and yield ratios provided for half year. These are the other ratios which I have indicated for the quarter, which are now reflected here for the half year. Capital adequacy stood at 10.84%, with Tier 1 comprising 8.41 and then Tier 2 comprising 2.43. Total capital stood at 18,440.35 as per the Basel III. These are the priority sector advances composition, and this is the retail credit composition. These are the overall segment-wise composition of advances. Advances to industry, sector-wise breakup. Exposure to infrastructure. Investment portfolio breakup, SLR, non-SLR, then HTM, AFS and HFT profile. Risk parameters and yield investment portfolio. Restructured advances status. Standard restructured accounts position. NPA, gross NPA, which I have already indicated, is reduced to 5.7% sequentially. Net NPA also has improved to 3.55% sequentially. This is NPA movement status. This is for the half year NPA movement. This is the composition of NPA in among the sectors. Other sectoral NPA position. Human resources, total number of staff stood at 21,280 as at the end of September, comprising officer staff, non-subordinate staff and subordinate staff. These are the alternate delivery channels. We have 2,551 ATMs as at the end of September. These are the activities under financial inclusion. And various IT initiatives taken by us during the quarter. Now I keep the forum open for interaction with our MD and ED. Yes.
See, one is compared to first quarter, one is our slippages to NPAs are low this time, and also the credit growth has been better. Both put together, they have increased the retained the income despite reduction in the base rate substantially, and also the provisioning requirement has come down.
So are you confident of surpassing last year's profits?
See, last year's profit for the year were 497. We are already on half year, how much? 558. So that is already crossed. We in the guidance said that we should reach about 1,000 crores for the year, which we are quite hopeful of reaching. Yes.
Just wanted your assessment. Do you think the tide has changed, or it will take a few more quarters?
See, some of the sectors have shown a good improvement, like ports, like roads. They have shown good improvement over last 6 months. We are seeing a good improvement.
What a mixed bag PSU Bank earnings always end up being. We've seen that shocker and a howler of a number from IOB. But of course, the OBC has been good, and Indian Bank as well. Major spike on the stock, almost 10% higher, because the provisions have almost collapsed. I mean, not only is the asset quality stable, but the provision number